Hello, and thank you for attending our webinar, So Many Entities, So Little Time. I'm Brian Boji, and I lead the healthcare vertical for Sage Intacct. We appreciate that you've taken time out of your day to watch, so we'll begin right away. First, let's cover a few housekeeping items. We want to make sure this session is as useful and helpful to you as possible. During the webinar, if you have any questions, please feel free to submit them in the Q&A panel, and we will address those at the end of the webinar. If we end up running out of time before we get to your questions, we will follow up with you afterwards and get your questions answered. For your reference, we'll also be sending you a copy of this presentation and a recording of the webinar in a follow-up email after the event. Today's agenda, we'll be discussing the challenges of multi-entity healthcare organizations. We're going to talk about the difficulty of consolidations and discuss with Allison Burks of Perfect Dental Management how to better provide insight into your healthcare organization. I'd like to introduce and thank our guest speaker, Allison Burks of Perfect Dental Management, for joining us today. Allison, please tell the audience a little bit about yourself and Perfect Dental Management and your role there.
So I started with Perfect Dental Management in June 2017. Perfect Dental Management provides services to 18 dental offices throughout Massachusetts and New Hampshire. We pride ourselves on being a very lean company when it comes to the management employees. We have 5 billers who handle the cash application of payments, 1 credentialing specialist, 1 HR director, 1 operations director, our CEO and founder, and myself. So I am the controller, and I handle all of the financial aspects for all of the offices in PDM. And this ranges from processing AP to handling relationships with our banks.
Fantastic. Allison, do you know how long Perfect Dental Management has been a customer of Sage Intacct?
Yes, it's been 2 years. I was part of the implementation process as well.
Fantastic. So, Allison, you have 18 different entities between Massachusetts and New Hampshire. So why do healthcare companies create multiple entities? Different legal entities, whether they be clinics, diagnostic centers, medical labs, and practices, are usually created by a parent company for a range of reasons and purposes. Some of them are legally driven to limit liability exposure, while others are created to optimize the tax profile or through strategically driven initiatives like mergers and acquisitions. Allison, the extent of use of multi-entity structures is a trend we see expanding in both usage and complexity in healthcare, especially in dental management. Why do you think that is?
So in the world of dentistry, many states have laws against anyone owning a dental office that does not have a dental license. So out of lawful necessity, a multi-entity structure has to be put into place. The positive aspect, though, comes to the doctor. They can focus solely on dentistry rather than the business aspect. And they do not want the headaches of running a business while also trying to provide the best service to their patients. So that's why we have multiple entities and multiple owner doctors as well.
And can you explain to the audience how you're using them and how you model them?
Yes. So we have 18 locations, but they fall under 7 entities. 5 of them consist of 1 or 2 practices. One has 12 practices, and the other is for our management company, Perfect Dental Management. And they all roll up under PDM. We have separate entities as some offices are specialty care offices, such as pediatric dentistry offices. And this allows us to track results as specialty offices have different payer rates and different pay models.
Fantastic. So, Allison, you were talking about all the different entities and how they roll up and how you model them. And I'm sure that multi-entity healthcare organizations like yourself face complexities. You know, they could be decentralized payables, inter-entity transactions, multiple currencies, global consolidations that require a purpose-built financial management system. At the high level, what are the key things that you look for from a purpose-built financial management accounting system?
We are looking for the ease of use. That's very important to us, and the ability to streamline processes. Also, accurate and timely reporting is very important.
And you said you were a part of the decision to choose Sage Intacct. What was the reasons that you went with us, and how does that draw back into the financial management accounting system purpose-built question?
We used QuickBooks prior to Intacct, and it was very time-consuming to record entries between entities. Each entity had their own QuickBooks database on a remote desktop server. So that also took time, and it also worked slower in uploading entries. Also, entries essentially had to be recorded twice, once in the parent company and then another entry in the entity database. So with Intacct, it has cut down significant time as it automatically records an inter-entity entry. Consolidation is a few checks after all entries are posted rather than going into every QuickBooks database and manually reconciling.
So you were running different instances of QuickBooks in each of those entities and then trying to consolidate it all together, correct?
Correct.
And were you using Excel to dump all that information in and massage it and then use that to run the close?
That is correct.
And, usually what we hear, and I'd love to hear your experience on this, doing that sometimes is problematic as their name on the chart of accounts, or the information might not line up perfectly, and that causes a lot of late nights and weekends.
Exactly. Not every account was set up with the same account number, so that could be hard to reconcile. And then also, everything wouldn't line up in Excel with QuickBooks, so that became time-consuming as well. Also, from a financial reporting system, it was every entity had their own P&L and their own balance sheet, and to really get any kind of consolidated reporting became a challenge, and that also opens you up to human error.
Absolutely. So with all that complexity, that creates a bunch of challenges. And some of the top multi-entity healthcare challenges are the expansion of facilities and service lines across regions and states. You're seeing that now being in both Massachusetts and New Hampshire, and that could mean different reporting requirements for each of those states. There's the varying nature and changing nature of accounting rules as regulatory frameworks evolve. You've got to keep up with those, but you also have to keep up with healthcare rules and regulations. Could be HIPAA, could be California Consumer Protection Act, could be other things. So those things continue to evolve. There's also growing the business, both organically through new ventures or by acquiring others, growth through mergers. And we're really seeing that in both the physician and dental practices, and it's continuing to grow, as I'm sure you see as well. There's also increasing interrelationships and intercompany activities between entities within each parent company. For example, inventory and supply sharing could be dental kits, could be aspirins, Band-Aids, etc. Now, so are these the challenges of multi-entity structures that you see, and how are you handling them?
Yes, we are actually in the midst of working on some acquisitions. And prior to Intacct, the setup would be much more intensive. It would take a lot more time. So we would have to set up a new QuickBooks database, set up a chart of accounts. Also, any outside platforms that would sync with QuickBooks, you can run into issues there. For instance, we use Bill.com as our AP processing system. So to get that to sync with a new QuickBooks site would take a lot of time. So with Intacct, it's easy to add an entity and easy to add locations as well. And the chart of accounts is seamless, so there's nothing you really need to add as you already have it set up. And then it also easily incorporates into reports. Even the customized reports that you may build will still pull in the new entity and the new locations easily.
So if you had to estimate what the time savings is, what was it before? Was it days to hours or weeks to days? How's that look now?
So the month-end close could take anywhere from 2 to 4 weeks, depending on if you had any issues or you had to research items. And now we are seeing that we can close out our month within 5 business days. And it could probably be faster, but I'm the only person that can close the book. So that's something to take into account.
Great. So that was great information. We were talking about consolidations, and consolidations, which, the grouping together of all related organizations under that single parent company's control, is an essential requirement to create that operational view of the entire organization. Whether it's your multi-practice dental group or several long-term care providers, a network of hospitals, or maybe it's a chain of imaging centers, stakeholders want and need that understanding of various lines and businesses, be able to allocate capital and fund the organization. So consolidation eliminates all that intergroup activities and balances to report transactions with external third parties, as if the entire group of companies was operating as a single entity. So today's consolidations obviously are a staple of accounting, but their intensity and complexity continues to change as the healthcare industry continues to undergo significant changes. Alison, why do you think that is? And can you tell me about the challenges you contend with on consolidations and what it looks like now since you've moved over to Sage Intacct?
Right. So real-time data and cloud-based technology is what is needed to make timely financial and operational decisions. So it's important to have this timely consolidation so that you can present to stakeholders, or most companies have reporting covenants with banks as well, so that really drives the need for timely and accurate reporting. Prior to Intacct, as I had said earlier, the month-end close could take anywhere from 2 to 4 weeks, as everything is very manual. So part of the upside of Intacct was they have inter-entity entries. So it was easy to reconcile balances between entities, and it was also easier to upload one journal entry with multiple entities on it. So for example, we would have to upload a separate entry for payroll for each entity. Now it is one file and easily uploaded. And with our consolidation, it's a few checks and balances after all entries are posted. Prior to Intacct, with such manual entries, it was easy to miss something. So it not only took longer to check, but it also took longer to research why it was out of balance.
That's interesting. So what were some of the things that you think might be missed or have been missed?
For instance, a check would have been entered into one entity, but it wasn't entered as a due from another entity. So it may be just a $500 check, but it wouldn't match. The balances wouldn't match. So you would have to go through all of the detail to find out where that was missed.
Yeah, both time consuming and probably a little bit aggravating as well.
Mm-hmm.
So in addition to the complexity, we're seeing the timelines for consolidation are also compressing. And they're driven by several factors. There's tighter reporting deadlines, there's the transparency of information for both industry and government regulators, there's reporting to stakeholders like the physicians or the dentists and so forth, or caregivers that are part of the organization. There's planning for the future. And there's also the need for a well-documented, well-controlled consolidation process. And that also helps, as you were saying earlier, preserving and enhancing the financial reporting integrity. So can you tell us a little bit about the consolidation pressures you're feeling at Perfect Dental Management and how you've handled them?
So as I said before, we had issues with getting timely financials. So now we are able to present the financials in a timely manner and present issues that could occur. And so we've been able to make changes in real time rather than a month or two later. So that's the importance of having these on time and presenting them to the CEO and the operations director. So I can present them the results to them and they can implement changes. We also work as a team to identify the problem areas and work together to come up with solutions.
So the different types of information they're looking for, are they different in the outcomes? Is the CFO looking for information that the operations team isn't? And are you able to create reports that match exactly what each of those C-level folks need?
Right. So the CEO is looking for year-over-year performance, and our operations director is looking more for month-over-month performance indicators. So it's easy to make specialized reports for each of them and go over them either together or separately.
That must make both of them happy.
Right. They are more aware of any potential issues than they were in the past, and it's not coming to light when it might be too late.
Yeah, the timeliness of that is really important, and we're going to talk a little bit about that when we talk about the switch from being just a caretaker of information to really being a strategic part of the business and how the business makes decisions. So we talked about both the time-consuming and error-prone nature of consolidations, and as you can attest, Allison, and have talked a little bit about before, any healthcare CFO can tell you, even with excellent communication processes and structure, multi-entity consolidations can be time-consuming and error-prone. In a recent study by Financial Executives Research Foundation and Robert Half, 58% of companies still manually reconcile accounts. Only 22% of companies in the U.S. use software to reconcile accounts. Why do you think that is, Allison? Is it that healthcare organizations need a smarter way to consolidate their financial results with greater speed and lower risk? And we talked a little bit about that as well. And you also talked about using spreadsheets and manual procedures, which hold back many finance teams from playing a greater and strategic role within their organizations. So tell us a little bit about why you think it's taking folks so long to make that switch, and how it no longer supports the fast pace of today's healthcare industry to continue to dump all of that information into, say, an Excel file and then try to sort it out from there.
I think that the accounting structure and the ways to do accounting have pretty much been, you have the basic principles of accounting. So I think to change that and change your way of thinking can be a challenge for those of us that are accounting majors. So it can be hard to change what you already know, and you know how to do that. Also, I've used, reconciliation software at a prior job where it took a lot of setup, a lot of time to try to mold that system to your business and get it to work the way you want to. So I also don't think people want to take that time to get it set up and make sure that it effectively works when, sometimes people say, if it's not broke, why fix it?
Sure, but you do lack that insight that we were talking about before. What was it that got you and your organization to take that leap and move over to a cloud-based financial management system?
Well, as I mentioned before, we are a lean, running management team. So the time that it was taking to close out our books and to make operations decisions was just killing us in the time and the effort spent to try to make changes. So we did it as a time factor, and it's really helped us to clear up time so we can focus on major issues and not trying to import a journal entry into 6 different entities.
Yeah, we usually hear that after 4 entities, the pain continues to grow, and you hit that breaking point where you just say, enough, I just can't do this anymore.
Right. So yes, we hit that point, and once the CEO and the operations director noticed, and I, vocalized what the issues were, it kind of became a no-brainer that we needed a new system.
In this example you can see, you can also create a periodic review. So we've kind of gotten to this point where the new way to consolidate comes from leveraging leading cloud financial management systems. And the characteristics, you talked about this before when we hit some of those key points earlier, of this type of configuration include really 4 critical differences from other traditional on-premise solutions. A scalable accounting foundation for smarter automation. Healthcare firms are often adding virtual and physical entities to their corporate structures. You're currently in the process of that now, and that's one of the key areas. Traditional accounting and financial systems, as we talked about, struggle to add these entities, and you're able to do it very, very quickly. On-premise solutions really can't replicate the systems and processes for new entities across geographic jurisdictions, where cloud-based financials can alleviate this, enabling you to add new business units seamlessly without any additional investments in hardware, software configuration. You talked a little bit about that when you were saying that you guys are able to run a really lean organization. We see support for faster growth. Many healthcare firms are moving to quickly capitalize on those M&A activities, and you're working on that now as well. You've got to be agile to support those changes, establishing books and records that align with the rest of the company. And then cloud financial management systems are ideal for ramping up new entities. Existing practices, perhaps with similar business models, can be used to quickly configure accounts for those new entities. Report writers can adjust to the reporting needs and meet different GAAP and healthcare industry requirements. You talked earlier about adapting that chart of accounts to meet the needs of that new business unit right out of the box and manage the consolidation process. So Sage Intacct is helping to allow you to take all that consolidated information and have it be fully integrated at any point in time. And it was great the way you talked about how you can take all of that data from each location, from each business line, specialty, segment, and have it at your fingertips so you can really keep the staff whether it be the CEO, the operations group, better informed. And providing that better insight, you're able to create deep data between systems and use that information to provide transparency, where before there was a data gap between systems and spreadsheets, and that can inhibit the transparency. It certainly limits insight and creates latency between when activities happen and when they actually get reported. And since you've moved to cloud-based financials, that eliminates that gap, and you talked about how decisions can be made quickly at the push of a button rather than take a long time in order to get there. So when you and I were discussing this webinar, Allison, you talked about being lean and having the ability to grow without adding headcount. Can you tell the audience about that?
Yes. So before I started with the company, there was a CFO as well as an outside CPA firm performing the accounting and financial tasks. When I started with the company in 2017, the CFO left and we stopped using the CPA firm. We hired a full-time accounting coordinator that would focus mostly on AP and other entry-level accounting work. Since implementing Intacct, we were able to cut it down to just me. It integrates really well with our AP system, which is Bill.com. So we have saved time in reconciling Bill.com to Intacct. It's made it much easier with multiple entities. We were able to cut down Bill.com to just one Bill.com server. We used to have a database for each entity, so that has saved us money as well. Also, uploading entries doesn't take as long as it did in QuickBooks. So with this savings that we have incurred from using Intacct, we were able to do that and also work on acquiring new practices, also adding people to the offices where they can really impact, revenue.
That's great to hear. For businesses and financial executives, dashboards are like the cockpit control that pilots use to fly airplanes. Whether it's dials, meters, graphs, performance indicators, all provide an easily digested snapshot on the status of the business. Now, Allison, you talked before about how you use those with operations and your CEO to make decisions. And we see KPIs as a growing need. Every time we talk about them, we get a lot of enthusiastic support from our audience, especially when you're a part of a multi-entity healthcare organization. Understanding the performance of each entity is crucial. So, Allison, what types of KPIs do you track across multiple entities now, and what are some of the future KPIs you'd like to track?
We track labor as a percentage of revenue. We also track marketing costs as a percentage of revenue, and then dental supplies and lab expenses as a percentage of revenue. We also track year-over-year, as well as month-to-month growth. Some of the future KPIs that I would like to track is the production per patient per doctor, as well as the revenue by doctor. And I think that these can be easily incorporated into Intacct. Just need to take the time to do so.
Sure. We're seeing a lot of folks that want to track on the physician side CPT codes, on the dental side procedural codes, and claim information in the aggregate, and bring that over for better reporting. And we're certainly working with our customers in order to do that. And you and I had a great conversation about that prior to this conversation, where we talked about being able to do just those types of things. Well, Allison, everything that we've talked about really shows how you've been able to propel your healthcare organization forward. And that's by addressing the challenges of consolidation using Sage Intacct, a single cloud-based financial system that can really move things and help you move the needle. The benefits of automating the consolidation process, as we discussed, is really accelerating the integration of new entities and solutions within your organization, improved control and opportunities that leverage one financial system across the enterprise, and centralize the core accounting functions. It's being able to have that drill-down insight from the consolidated perspective into each operating entity. Great example of manually not finding a check for $500 and then having to go hunt for it through an Excel spreadsheet. That really highlights the ability to find things now versus the error-prone nature of before. There's greater insight. More than ever, the data is finance-rich, and you have all of that information and can use it to make great decisions. So a truly integrated cloud-based financial system can automate the consolidation process, increasing quality and trust. And senior healthcare executives, again, we talked about CFO and operations, can view that information with confidence, which really enhances the credibility of finance. And in this case, you've been able to do so much yourself, your credibility as well, and opens the door for new opportunities to really add business value. So, Allison, as we discussed, these are the types of benefits, and this is what you're seeing today. Is that true?
Yes, that is correct. Intacct really opens up, the transparency, which opens up, communication and better communication and an easier way to identify any issues and present them in an organized manner.
That's great to hear. So Allison's done such a fantastic job telling us a little bit about what she's been able to accomplish. This is a snapshot from one of our other customers, Personal Healthcare, who supported growth with multi-entity financial management. You see some of the challenges before are similar. The manual financial process, ineffective accounts payable management, no multi-dimensional visibility into profitability and operational metrics, and really wanted a trusted advisor to support their implementation. And the gains have been fantastic. The shortened monthly close from a week to a day, the rich insight into financial and operational data, and the minimized the financial staffing needs despite such fantastic growth. So, Allison, these are some of the things that you've been seeing as well, true?
That is correct. One thing that I would like to add as well is prior to Intacct, we did not really have customizable reporting, and now we do. And this reporting can be easily interpreted at any level of the company. In the past, managers rarely saw any total financial results. Now we are comfortable with the reporting and able to present it to managers and owner doctors in a way that they can understand.
Well, Allison, this has been incredibly educational. The information that you've provided has been fantastic and really is actionable for the audience that has taken the time out of their day in order to be a part of this webinar. So time for a couple of questions that I'll pull in. And first question is, how long did it take you to implement Sage Intacct?
It took us about a month. We had worked with the outside third party that helped us with the implementation. So it was very helpful and pretty quick.
That's fantastic. That's really, about the amount of time that a month to 2 or so we see on implementations across the board. But what was it that made you make the choice out of all the other vendors that are out there to go with us at Sage Intacct?
I liked that it was customizable. I think that it was the most important thing to me, and being able to make any reports that I wanted to. You can set up any accounting groups, group of locations. Like the customization is what really attracted me, and then it's also it's an affordable cloud-based system. I think that I saw some other, NetSuite and other companies that it just was really out of our price range for what they were trying to sell us. And Intacct just had that what we were looking for, the customization and the quickness to implement that really, pushed us to agreeing to using Intacct.
Great. So what tips would you have for people that are in the process now of reaching the end of their QuickBooks life and are looking for something new?
I would suggest, looking at really slimming down how many reports that you need in a month. Also, how many accounts do you need? It really gives you a chance when you're implementing Intacct to clean up things and make it more streamlined. So I would suggest really taking a look at your process and how can it be improved.
Yeah, that's fantastic advice. That'll get everybody to make the positive changes and give them the ability to do that as they're kind of starting fresh with a new accounting system. So are you interested in learning more? You can try Sage Intacct with a free 30-day trial. You can read how Personal Healthcare used multi-entity financial management to support their growth, attend an upcoming webinar, follow us on Twitter, or connect with us directly. And you can give us a call at 877-437-7765. Thank you very much to Allison Burks at Perfect Dental Management. That was fantastic insight that you provided to us. And thank you for listening and watching this webinar. We very much appreciate that you took time out of your day in order to see this and hope to see you on an upcoming webinar in the future. If you've got any questions, you can email them directly to me at brian.bogie@sage.com. and we'll get those answers to you quickly. Again, thank you very much. We look forward to seeing you again.